energy provider SSE has confirmed it's on course to give its shareholders a dividend increase for its current financial year that at least matches inflation. But with the energy market currently under investigation by the Competition and Markets Authority, and with more political intervention likely after next year's general election, what are the prospects for one of the country's biggest energy companies? SSE says its core purpose is to provide the energy people need, but it's got to provide something else. And that's a return on shareholders' investment. The company, which produces, transports and supplies energy in the UK and Ireland, has a remarkable record when it comes to shareholder returns. It's increased the dividend by more than inflation every year since it was formed in 1998. But that's getting more difficult. It used to target every year inflation-busting dividend growth of at least 4%. Then it was 2%. Now the promise is not to bust inflation, but just to match it. The company puts this down to challenging market conditions over a number of years. With the exception of heavily subsidised renewables, like wind farms, generating electricity has barely been profitable. And that market itself is now preparing for the government's electricity market reform. 2 months ago, the regulator Ofgem boasted about taking £2.1 billion out of distribution companies' business plans and cutting their costs. And then there's the people to whom SSE provide its energy, customers. Energy prices are a huge concern for householders. So, in these days of retail politics, they've become a huge concern for politicians as well.
Week after week, he denounced Labour's call for an energy price freeze to help families and businesses. But now apparently, he supports the price freeze.
As privatised utilities, politics go with the territory for energy companies. And SSE took the political and energy world by surprise when, in March, it announced its own price freeze, saying its prices won't go up until January 2016 at the earliest.
Good evening. Under pressure from politicians, a big drop in customers and a probable competition inquiry, one of the big power companies blinked today.
Tell us, why are you imposing this freeze? Is it because the number of customers you have is actually going down?
No, we've been doing a lot of work with our customers, polling them, and as a result of listening to what they've said, one of the biggest concerns they have is that energy prices may well be going up again over the next couple of years. So having listened to them, we've decided the most important thing for our customers over the next couple of years is freezing prices.
It was clear that it was going to take some pain in order to achieve this, through streamlining the business and tackling operating costs.
Now let's remember, a price freeze costs companies money. In the case of SSE, £100 million. They're cutting jobs as a result. 500s are going. They're also reining back investments, building fewer wind farms offshore.
While stating its commitment to dividend increases that keep pace with inflation, the company warned that the ratio of its earnings per share over its dividend per share could fall to as low as 1.2 in 2017, compared with a long-term target range of around 1.5. And although it's the total level of profit that tends to grab the headlines when energy companies report their results, it's earnings per share that give the true underlying picture of financial performance. That's because they show the amount of profit after tax that has been earned for each share. For SSE, the challenge is significant.
To maintain investor confidence, SSE needs to be able to demonstrate that it will continue to deliver real dividend growth. For investors to be confident in that real dividend growth, they need to be comfortable that SSE will continue to grow earnings per share, that it will continue to maintain dividend cover at an appropriate level, and it is able to navigate its way through a complex political and regulatory environment.
As well as worrying about EPS, the company has to reassure the credit rating agencies, who are organisations that influence how much it pays for its debt, that its long-term financial plans are sound. With businesses in energy production, distribution, supply and related services, SSE is one of the biggest energy companies operating in the UK and Ireland. It says that all of these businesses have one core purpose: to provide the energy people need. The question for company management, however, is this: In a business environment that can somewhat politely be described as challenging, for how long can it continue to provide increases in dividends that shareholders need to get a return on their investment?